Why 0.5% and not 0.25%? And then also, because we're amongst friends, what's coming?
Why 0.5% in terms of our interest rate cut and not 0.25% at our last meeting? The judgment ultimately was, I think either of those would have been appropriate. There was many signs that the labor market was slowing. So the unemployment rate got down to around 3.5%, and it then ticked up to around 4.2 or so percent. Historically, when the unemployment rate has gone up by that much in America, it is presaged a recession. It says, hey, a recession's around the corner, and the unemployment rate would take off from there. We definitely want to avoid that. And so we saw a lot of signs that the labor market was weakening. And so we said, you know what? We have made a lot of progress on inflation. Let's dial back our interest rates a little bit. Now, even after the 50 basis point cut, I still think monetary policy is still putting our feet on the brakes of the economy. We're not yet back to what we consider to be neutral. And so moving 50 basis points just moved us further along back towards neutral, but we're not at neutral yet. So I think some folks argue for 25, some argue for 50. I think either of those or both of those were reasonable. We decided to go 50. Going forward, we're going to look at all the data. We're going to look at the GDP data, the inflation data, the labor market data. You know, one surprise over the past couple of years for me has been how resilient the U.S. economy has been. You know, we've raised rates a lot, and the U.S. economy has basically absorbed them and still continued to perform quite well, and the labor market has remained strong. And that's really good news, but it's a little bit hard to figure. That makes me wonder, maybe that neutral rate that balances everything out is higher than it was before the pandemic. We're just not sure.